Good morning, everyone. Just a quick preview from us on the central bank release to come out of this week. Now, we do have the minutes on Wednesday. Not necessarily an interest rate decision. It is a review of their most recent interest rate decision. So what we're going to look at today is the RBA. The RBA tomorrow morning, 5:30 a.m., which will be tonight, our time, London time, first thing tomorrow morning. But that will be tomorrow, Tuesday, the 5th of July for the Australians. But essentially what we're expecting out of that meeting is a 50 basis point rate hike. Now, that is largely expected by markets. There is currently no consensus or no thoughts, no 75 basis point rate hike on the table. So I think we can rule that out for this meeting. But they did surprise us. They did surprise us. This will be the third interest rate hike, and they did surprise us with a hike at the first one. They did surprise us with a bit more of a hike as well. Or a bit more of a hike than markets were anticipating. So I would not completely rule out the possibility of a 75 basis point hike, but as of now, it is not on the table and would be a big surprise to markets if we did get it. So we are expecting the 50 basis point hike to go from spot 8.5, as you can see here in the previous, up to 1.35, 1.35%, and that is where we're looking. Heading into today. Now, in terms of Australia, in terms of the Australian economy, the reason why they're hiking interest rates is the same as the other central banks. They need to get inflation under control. They need to cool down inflation, and they need to get a grip on the kind of fast growth that we're experiencing around the world, which has slightly cooled down. So I think central banks will be reluctant to hike as aggressively going forward with the anticipation for a global recession. But the Australia are a little bit of an odd one out. We can see in China, China struggled for a long while, and then they went into their COVID lockdown, had a lot of COVID restrictions, and they are now coming out of that. The country is starting to get back up and running again, and that is likely to spur some economic growth over the next few months, which when China does well, Australia does well with it. And if economic growth is going to be positive and going to be strong over the next couple of months in China, that is likely to lend support to the Australian economy, which then opens the door to the central bank being a little bit more flexible, or being able to be a little bit more flexible in terms of rate hikes in a way that other economies just don't have. Other economies and other central banks don't have that luxury, so they can get a little bit more aggressive, I think, in the short term if they need to. But we will have to see how that plays out. Going forward. Again, as I said, 75 basis point rate hike is not on the table as of now. 50 basis point is more in line with what we are expecting. Now, as we come across to the charts and have a quick look at the charts, we can just see straight away the importance of picking and choosing which currencies we trade these against. Now, we've been on a hiking cycle in the RBA. This will be the third consecutive rate hike, and there's been a little bit of hawkishness recently over the last few months around the Australian dollar. Now, we can see here move lower here. This is Aussie, this is AUD USD against the US dollar, Aussie currency pair as we like to call it. That is in a downtrend, clear technical downtrend. We go to Aussie Kiwi, which is the other benchmark for the Australian dollar, and again that is in a solid uptrend. So if we were looking for hawkishness over the last couple of months on the Australian dollar, trading the major was not the way to go about it. Trading something like Aussie Kiwi was a much better way to go about it. So that's something we need to think about going forward, trying to pair some weakness with strength and a bit of strength with weakness. That's how we can look to try and take advantage of these types of trading opportunities. Now, if we have a look across this, we've not got a great deal of levels across, around. I think for me, this will be something that I'd be interested in, this high across here, at 70.50. I think really to invalidate this downtrend, I think I'd probably want to see it, above that. I'd probably want to see us get above that and kind of establish a higher low before looking to really go and start buying into this. In terms of today, it might be a little bit of a tricky one to trade, but we'll have to see how that plays out. In terms of the downtrend, we're still in that clear technical downtrend, and really until we're above that high, I don't know if I'd be that confident about trying to fish for these lows down here. For me personally, I like a bit of confirmation to see maybe a higher low created or a breakthrough a previous lower high to confirm a shift in sentiment on the charts, and then that lines up with a fundamental bias, and then you can look to try and take advantage of something like that. You come across the Aussie Kiwi, and we've just clearly been trending higher for a while. We do have on this chart, we do have a bit of a left shoulder, head, right shoulder. We do have a bit of a head and shoulders, and this is a big daily chart, so it is quite significant to us. We would have a neckline through this. Now, as I said, we are in that uptrend, but with the head and shoulders, if you get a break through this neckline and a bit of a disappointment from the RBA today, that could open the door for a bit of a move lower. You can definitely maybe tag one of these levels down lower. If you get this across here, you could definitely see Aussie Kiwi down at a level like that. These couple of touches back here, you see this kind of region back here, and also a bit going on back here. So break through this neckline would probably signal, for me, you'd be looking to target somewhere down there. If you do get the hawkish RBA and you do get the move higher, an invalidation of this head and shoulders would be nice. A break through the head to completely invalidate it, signal trend continuation. But again, that's up at 111.50, so we're a bit away from these sorts of levels. We're kind of 150 odd pips away from both of those levels. So we do need to be slightly careful with them. For me, on a hawkish RBA tonight, wouldn't massively shift these trends, wouldn't massively continue the trend, but it can definitely give us an indication that these things might continue or might reverse, and then we can look to try and take advantage of that in the future. If we look towards the stock market, if I just get that up, AU 200, that's the ticker, sorry. And then having a look at this again, you're looking at this on the big daily chart. After this big run higher, we had this big run higher, and then we just had a topping out. We just had a failure to make new highs. We had kind of a triple top off here. The buying off this section only got to here, the selling off this section got to here, and then the selling off this section has reached all the way down here. So we've had increased levels of selling each time we've returned back up to that level, which is important for us. We then establish a clear technical downtrend. We look from here to here to here to here, and then here. So market is clearly bearish in the lead up to it. A hawkish RBA would send this thing lower, and we do also have a break and a retest of this kind of level across here. So for me, at the round number of 6,800 as well. So for me, that's the level to be focused on the stock index. I think the bearish is clearly overall, or the bias is clearly overall bearish. Sorry, I think in order to confirm continuation of this bias again, we would need to see it probably through these lows back here. As long as we are between this range, I think we are a little bit trapped. But hawkish RBA should in theory send this lower. But again, we don't know how much of this is priced into markets. The 50 basis point rate hike could be this, or could be something to do with the strength of that move lower. And we just don't know in these situations, so we got to work with what the markets are telling us. We can have all these opinions and biases and stuff to do with the fundamentals, but in order for us to act off that, we do need to see a little bit of a break, I think, either side of any of these levels, in order to feel really confident about looking to get in. But that's it from me. Then I'll be sure to update a little bit more tomorrow when we have some more idea of how it's played out. But do check back in tomorrow for an update on how this has played out. Thank you.